All right, honestly, I don't want to have an intro to this. I don't want to say any of that shit. I'm tired, okay? I've been inside for 2 days. I'm not doing this shit at a computer. The markets have been crazy. A lot of ups and downs, a lot of fun, even to the point that's what inspired this video. So we were sitting there about 10-20 minutes before earnings. I posted a story on Instagram and I got people's opinion on what they thought was gonna happen, and well, we made the play. So it ended up getting filled. It worked. I'll show you guys these clips and we're gonna talk about it. So enjoy it. I hope you guys are doing good in the markets. It's kind of crazy. I guess what we will talk about with this whole point of why I did this video, it brings up the aspect of being a contrarian, as well as, you know, a strategy to play the options on earnings that's, you know, higher probability and safer to a degree. It was kind of risky and dumb what I did, but, you know, it was funny. So that was worth it, right? But yeah, so hope you guys enjoy it. So I just posted an Instagram story seeing what people think about Amazon earnings, and I already got some votes on it so far. So we're chilling here. How much? You guys see either? I don't know what I'm saying. 24 yeses, 9 votes. I actually got to update it. But what we're gonna do here, 1 minute before market closes, what I will do is I'm gonna just take the opposite trade of what everybody votes on. So it's getting kind of close here, 24 to 10. It's like, what, 70%? You think so? 71.29. So we'll see how that goes. And this is what they call contrarian investing. Now, I'll talk about that. I'll make that a video. It's actually very interesting to talk about in this market right now and how contrarians would play. So I discussed that. Yeah, that's pretty much it. So let's see what happens here. I'll finish it once we get to the last minute. Good luck on Amazon earnings. We got some plays. Conroy's killing it right now. I just posted that story. He's up 10 grand. I think I'm still down 30% on my calls. He did a good average day on I was too pussy, so maybe we'll talk about that in a video too. I think that'd be a good one. Come on, Conroy, come on, bro. We gotta get you in here, bro. Look at that. Look at that dip. Oh, yes. They can't even see you. See, it's just your beard. Maybe we'll make you like John. Would that be weird if we just did a whole channel like this?
Where nobody has a face.
With no faces. And we just did like interviews like this. So yeah, you guys will have to talk to him. He killed this play. We're gonna see what happens at earnings. Let's see what you guys decide. And follow me on Instagram, The Trading Fraternity. I post most of my trades on there on Instagram. I don't have time to make a YouTube video every time, and that's where I'm the most active. So get on there. I love y'all. Let's see what happens. Okay, here, can you hold it real quick? Yeah. And we'll make this trade. Ooh. Let's see if we can sell it for like 350. They get filled?
I don't know. Can't see through the camera.
Nope. Well, I don't want to market sell it, but I kind of do.
Yeah, do it at the bid. What's the bid? Oh, the spread's wild, eh? Wow.
What? No.
You don't need the time.
I don't think we're gonna do that. Shit. No. I haven't even used this broker enough.
On market or not?
Yeah, I don't know why it's not letting me. Damn it. Well, that's the play I would have done. Market is now closed. Shit. Well, all right. I talked about it. The mic was off. We'll see what happens here with earnings, and I'll give an update after. Let's see what happens. Godspeed. All right, we're gonna have some producing in the background, but it looks like the order filled. It gave me the cash for it. It says I have it. It's not a working order anymore, so that was very surprising. Apparently it worked. You guys see what happened to Amazon. You guys made me a lot of money. Thank you. And this is gonna discuss the contrarian stuff. So let's talk about a contrarian and making money in this market. All right, so let's get into it. What is the contrarian? That is someone who essentially just does the opposite. They're, you know, contrary to popular belief. You guys have heard that, right? So this is somebody who's really going against the tide, you know, and that was the point of this. Literally, this was a great example. Instagram, I'm literally crowdsourcing my opinions. So everyone's saying, you know, 70-80% of people, and even the consensus for earnings on, you know, based on, go look at the price of the earnings as well, you know, everybody is kind of for Amazon going up. People thought that was the move. People thought that was the play. A lot of people were into it. Really, the contrarian goes opposite to it. Now, this is very popular. You know, there's been an amazing set of contrarians, and, you know, a lot of popular investors, you know, are considered contrarians. And it's not like you are a contrarian at all the time. Some people are. Some people with the stock market, they think it's always going to down, or they think, you know, Tesla's going to go down, or this, you know, they're contrary to popular belief. Again, I'm going to keep saying that. But you know, some people just with certain investments, topics, earnings, and that's how a lot of people, you guys could be, and that is a strategy for earnings, you know, especially now with options. That's why I thought this was cool. I think it even brings up part of what kind of occurs. This is how I trade options. I've talked about this, and, you know, this is like the Big Short. What those guys that would trade, you know, they would go for the low probability options, little amounts of money. If it hit big. If they lost, they didn't lose much, but it's kind of the same logic around here where you're going for the probability that people aren't really expecting, or that's the opposite. So most people were expecting a run up on Amazon. That didn't happen. But the thing is now with options, and that's what I want you guys to notice what I did, because this was in like 10 minutes, 15 minutes that I made the play, but I was still, you know, I was looking at this for a long time, just, you know, the whole week, every fucking tick, minute by minute, up until, you know, that close. I was looking at the option chain, seeing how things are moving, and really trying to find the best play to maximize my positions I already had. I was down on positions coming into earnings. I had some I picked up the day before that went up. It was just a weird mix, you know. It wasn't good. Hopefully my puts carry me home tomorrow, so you guys made me money too. Thank you, Instagram. But it was a mix, and, you know, I was trying to find the best and right play. It's like, you know, I did think they would go up. I thought, you know, more or less they would. I wasn't a contrary on this. I thought they would at least do decent, or maybe hold up, not what they did. But it's, you know, I didn't want to keep buying calls. I was kind of over it. I wanted something, you know, but I also, here's the key now, and this is going to be crucial to the rest of the earnings season for your guys trading earnings at any point in the future, anything, is understanding the price of what you're paying, especially the price for protection. And that's what a put is. You're buying a put to protect a position or to protect against downside risk. And how much are you paying for it? Because if you buy a put, it might not always make you money if the stock goes down, especially on the time frame, and how much you're willing to spend now is the reverse, because even if you go on a shorter time frame or you want to spend more money now to get the protection you want, is it really going to be worth it now, or to risk that much to get a real proper hedge? Or then if you spend too little, you don't get the right hedge. You know, I even had someone on Instagram, they DM me, and they're like, oh, I told you, you know, Amazon was going down, and they said they got weekly puts. I'm going to be surprised to see where the weekly puts end up tomorrow, because if you got weekly puts, they expire tomorrow. And if that happens, if it's not at your price, you're shit out of luck. And then again, if depending on how much you paid because of the implied volatility, it just wasn't there. So that's why I didn't buy a put. You know, if I was saying, hey, everyone thinks it's going to go up, I'm thinking it's going to go down, boom, I'm going to buy a put. Well, I looked through the puts. I didn't want to, you know, this was a random YouTube gamble. I said I'll put 300 bucks towards it. I didn't want to go too crazy on it. And even then, 300 is a lot, but I wanted a real viable play on Amazon, you know, something that would either make me money or would be, you know, worth the time. I did want to dick around, but I did want to make it, you know, still something worthwhile. So I made 350 bucks off it. Not bad, but you know, the key was, as I was looking through that chain, a $350 put wasn't good. If you looked at the weeklies, you know, anything that was 350 bucks that expired tomorrow, if you bought a put, it just wasn't there. You know, you didn't have a good play to play that on the put side. It just, because what were the odds of it going down to 1580, 1520? You know, it's kind of there, and it might do that, and it could be a profitable trade, but that's not the risk I like too much on that end for that amount of money. And, you know, anything else that would have been viable, you know, low 1600s where it got, you know, it did hit 1630. I think, yeah, maybe I could have got the 15. I'm gonna go double check what the price of those puts were. But even then, 300 bucks by tomorrow, that means it still have to go past that and lower. And you never know with Amazon, and we'll see. But with how this earnings has been in this market, I didn't like the odds of that. It just wasn't appealing to me. It didn't seem viable. I did have other puts that I bought and I was already up on them. So, you know, because I bought them right towards the end, and, you know, even then, those were longer term. I was okay holding those. But other than that, you know, it just wasn't a play to buy puts on it. Now, you know why I have so many thoughts running through my head right now, because this is something I think a lot of new traders and experienced traders don't really get when it comes to earnings. And this is where a lot of people mess up, is just what they're paying for the option. And it leads to that scenario where you're like, fuck, it made the move I expected. It did this crazy move. I didn't make money. You would have been better off buying it the day after earnings than the day before. You want to make sure that doesn't happen. Or you want to make sure you're getting in a good place. So in this case, I sold premium. I sold the call. So you guys have never seen me do that. I don't think I've showed, maybe I have shown a video on it. I don't really do it too often. Most of the premium selling I do is on positions I own. I'll sell calls or sell puts on positions I want to buy. But in this case, this was kind of a speculative thing. But I did, you know, I understood the calls on Amazon, and I was a little sketched out about selling the calls because the IV on the calls wasn't too high. But it was still, you know, there was some crazy expectations. It was up $100, and I knew it would go up, but I didn't think with where we're at the market, I thought we'd get capped around that 2100 level. I felt safe and I had it hedged. But what selling this call was doing, instead of buying a call saying I think the stock is going to go up, I'm the one who sold it to someone. So instead of me getting the contract and the right to buy the stock, I took the money and I said, hey, I'll give you Amazon at that price, whatever. I didn't own Amazon. I do have Amazon shares, so I could have gave it to him, but I also own calls at 2100 too. So worst case scenario, if it did hit 2100, I had November 2100s from a while ago. If it hit, I would have been good. I would have made money on those. That would have balanced out the trade. I had it hedged, but the whole idea of this trade is that the odds are in your favor. I showed you downstairs on the Tastyworks. You see it on the platform. It said it was a 96 or 98% chance of profitability because the options are designed to go to zero. So you guys are buying options. You see me buy options a lot. Think about all the options that expire to zero. They're risky. So you could be on the other side of that. Now, higher probability of success. However, you're going to make less money. You know, in that case, think about it. Amazon had that huge drop. I'm max making $350. That's it. I'm not making any more than that. I got my 350 bucks. That guy bought the contract from me. I sold it to him. It's down tomorrow. In the next 2 weeks, it's not going back up. That's it. That contract expires. So higher chance of winning, but you make less money. And also now in the reverse, the risk is higher. If Amazon had a crazy day and shot up 150 bucks after hours and went to 2,000, I would have been in trouble. That contract I would have sold it for 350 tomorrow. It probably would have been worth like $3,000. So I would have been down about 1,000%. However, if it didn't close above 2,100 by, you know, that day, every day that ticked forward, that trade would begin to work in my favor. So that was even, and like I said too, I had a call. So if it did go above 2,100, I'm like, oh shit, I have to give this guy the shares at 2,100. I have somebody who also gave me that right. So it was a nice little hedge. And, you know, premium selling is tricky, is more risky. You got to know what you're doing, but at some degree it is also safer. But this now, you know, putting this all full circle, you guys see there's a lot, especially if you guys have been watching my videos. You see there's many ways to go about a trade in the markets and shifting things, but also now look at options. Look at how you could play an earnings play, and then now this earnings season, and how you could utilize those options to your advantage and make the proper play that is going to put the odds in your favor, make a lot of money while mitigating risk and you know, so on and so forth. So I'll leave it there. Hopefully I didn't rant too long. Hopefully this is a cool, funny, informational video for you guys. Hopefully you guys aren't losing with money right now in the markets. I'm gonna make a bunch of videos. I know I didn't get to post the last couple days, but thank you guys getting me outside. Feels good. But we are going to talk about a lot of stuff because this market has presented a lot of great opportunities. So hopefully you guys have been learning. Hopefully some of you have been making money, and hopefully some of you have lost money and not too much, so that you could really, you know, take a step back and learn and really see what the market has to offer and really how you're gonna have to play this and what you really got to do to be successful trading. So leave it there. Love you guys. Stay in school. Peace out.